Hey everybody, welcome back to my channel where I teach you how to swing trade the stock market using technical analysis, charts, and my 30 years of trading experience. We're going to talk about today Tesla stock. Should you be buying Tesla? Should you be getting in at these crazy levels at $1,114 a share where it just closed this past Friday? Or should you wait for a bigger pullback? We're going to talk about all of that. Plus, I'm going to give you a little bit of analysis on the S&P 500 as we just closed out another monster month for the market. And make sure that you like and you subscribe to this channel, get those alerts as well, and click the join button below so you can get all my market research each and every day. That's going to include weekly master watch lists, daily watch lists. You're also going to get all of my updates on the FANG stocks, Microsoft and Tesla, plus updates on the indices like the S&P 500, the Russell 2000, and the NASDAQ. Check that all out down below by clicking the join button. Now, Tesla. This has been an amazing, amazing rally that we have seen of late. In fact, this is the biggest move that we have seen in the stock since the beginning of this year. Let's go straight to the charts. You're going to see here that this has been a monster move over the past couple of weeks. In fact, it's up 12 out of the last 14 trading sessions, hasn't taken a breather at all. But like all stocks, there does have to be a time where it does pull back. Does it happen next week or the week thereafter? I'm not sure, but you always want to be ready for it. And the last thing you want to do is start trading when the big bulk of the move has already been made. Wait for the pullback. Wait for there to be some consolidation to where you can better manage the risk and reward. The first level of support that I would target is the previous highs. And at the previous highs, and that's what we ended up breaking through this past week, you have highs at around 907, 908. Anything around that area on a big pullback would be ideal. Now, the problem with Tesla is it's become so big and it's become worth over $1 trillion. Elon Musk, richest person in the world. This stock, if it pulls back, it's going to hurt the market a lot because of how big it is, how big of its influence is on the NASDAQ, and how big of an influence it has on the rest of the FANG stocks, which are all $1 trillion stocks, minus Netflix, plus how much of an impact it's going to have on all of the FANG stocks. So if it does pull back and it pulls back to the $900 level, you could see a big correction in the market as well, which could provide you with a lot of additional buying opportunities and a lot of other names as well. But we're just going to focus on Tesla right now. But you can see, pulls back to this support level here, that would be really ideal. That's what I'm looking at right now. If it can do that, then I would look for a bounce back to the all-time highs and thereafter. Another trend line that I would probably pay close attention to is this rising trend line going back to the March lows. You can see here, it has held it so incredibly well. Now, that would be a far worse scenario for the bulls on Tesla. Now, if you're long on the stock, though, I'm not trying to crash your party here. I think it could very well go much higher into the weeks ahead, but I feel like at this point, trying to get into the stock at these levels is a dangerous game simply because you can't manage the risk appropriately. So we always trade with risk in mind. Even if you think that there's a ton of money to be made, you have to measure it against the risk that you're going to have to put forward in any kind of a trade to achieve those rewards. And in this case, buying it at $1,114 doesn't mean that it can't keep going higher. Doesn't mean it can't go up to $1,200, $1,300, or even $2,000. But you have to measure it against the risk. And at this point, where would you put a stop loss at? It would probably have to be somewhere around $850 if you were just getting in. Now, for those who are already in it, you do have some support here at this 5-day moving average that if it closes below it, that's where I would probably start taking some profits off. That's for the short-term traders. I'm not talking about long-term investors or those that think that if they hold it for the next 20 years, it's going to colonize Mars. Not talking about you guys at all. I'm talking about short-term trading right here. If it pulls back and closes below the 5-day moving average, I would at least start taking some profits off the table. Because you can see throughout this rally in the month of October, while it has broken below the 5-day moving average, it hasn't closed below the 5-day moving average. And so as long as it doesn't close below the 5-day moving average, I think that's a good sign for the stock. The other reason why I like this $900 level as a support level to get in on a pullback is because it also coincides with this massive gap right here. This massive gap that's jump-started the rally this week has yet to be filled. Most gaps will get filled in the stock market. And you got to be aware of that because it catches a lot of people by surprise. But this gap coincides perfectly with the $900 level, and I love that. So you got two support levels here. And these are the two support levels that I would watch going forward for potential entries. One, this one off of the $900 level, and then this rising trend line going back to the March 2020 lows. Either of those would be great. Now, if you're in it, then this 5-day moving average probably needs to be what guides you to going ahead and taking at least a little bit of profits off the table or significantly raising that stop loss going forward. Let's go ahead and go to the drawing tablet here. One of the reasons why I want to continue to point out the whole FOMO action of this stock is because so many people wait till it's super obvious to get into a trade. Look, when it has made a move like this here, this is your that future bag holder candle. You don't want to get in on that future bag holder candle. This here is what makes for a lot of bad trades. That whole area right there. That's where it gets super obvious, and you don't want to be getting in at those levels. You want to get in when it's not as obvious. You want to be getting in when it's breaking out through this level right here. That has come and gone. It's not here anymore. So at this point, if you're trying to get in long on the stock, you don't want to be doing that just yet. You want to wait for that pullback. You want to wait for a better pricing opportunity. And look, it may not happen. You may never see $900 again. And if that's the case, then you move on to the next trade. There will always be other really good trades to be had. You don't have to focus all your time, energy, and efforts on Tesla if it doesn't happen. Now, let's go ahead and look back at S&P 500 for this past week here. And what you're going to find here that's so interesting is that it has rallied in a very similar fashion to what Tesla's done. Not in terms of a percentage gain, obviously, but it has had a very similar rally in the sense that has managed to go up 11 out of the last 13 trading sessions and for most of October. Now, the volume has actually started to pick up a little bit in the past trading session, but overall it's still lagging. And we need to see more interest from the bulls going forward. Otherwise, it's going to stall out just above the previous all-time highs that it broke through this week, and it'll start to pull back again. Now, if you've been bearish and now you want to turn bullish, should you be getting in at these all-time highs? No, I would, again, wait for a pullback here because the risk reward is not as favorable at these levels here with the volume declining as it once was. So wait for that pullback. On the Qs, we managed to break through those all-time highs, but there's a potential for still a double top because it hasn't made significant new all-time highs. And even though a double top is supposed to be even price points, it's not always a perfect price point match. Oftentimes what you will get is a one peak that is a little bit higher than the other peaks. So you got to keep that in mind. Right now you are at new all-time highs, but it really needs to push way beyond those previous all-time highs to really instill more confidence in people on the sidelines that have not yet bought into the market that this thing is going to rally hard into year end. My biggest concern this week, we had the S&P 500 up, we had the NASDAQ that was down. My biggest concern this past week has been the Russell 2000 because it's starting to get vibes that are very similar to previous months, like what we saw in September. And that's where you have the NASDAQ and the S&P 500 trying to rally, but the Russell is not rallying. And we saw it a lot as well in the month of August. So you have this channel here, and this channel has been an absolute nightmare for the bulls. But you can see this channel just does not want to break out. It actually tested it this past week, could not break through it. Until that can break out, you're going to see a market with the S&P 500 and NASDAQ as well that really cannot make substantial new highs. It's imperative for the Russell to do that because once it does, it should be able to propel the rest of the market higher because right now it remains in this very choppy pattern that goes all the way back to January of this year. It needs to break out of that pattern and it needs to make some separation from this 200-day moving average, this 50-day moving average, and 20-day moving average, which are all on top of each other, providing incredible support. But nonetheless, the index hasn't gone anywhere. So watch that. The fact that it finished down this past week is a little bit concerning because it shows that there's a lack of breadth once again in the market. And that's what we saw with the SPY prior to this sell-off right here, okay? That sell-off right there started when the Russell 2000 was showing horrible breadth. And that needs to change in this upcoming week. We need to see the Russell rally some in order to continue this market surge to new all-time highs and close out the year on a positive note. If you enjoyed this video, make sure to subscribe, hit the like button, and click that join button as well and get all my market research. Let me know down in the comments below, what are your expectations for the market going to year end? Do you think we rally? Do you think we fall? And how do you think crypto will play into all of it? Let me know down in the comments below. Thank you guys, and God bless.